Here we have my family office, our November 2023 investment portfolio allocation letter. And let's jump right into this. There's a lot of insane things going on in the world. We had the COVID war, then we had the Ukraine war, and now we have World War, as Gerald Celente says. And there's really no shortage of hot takes of things going on out there. And it's hard to know what to believe. It's truly hard to figure out what is actually happening, what you should believe. And we talk about here all the time triangulating your position, figuring out what is actually happening by looking at 10 different sources and the big topics. There's little things going on, a lot of the little things, whether it's on the right or the left, you see a lot of clickbait, whether it's MSNBC or The Blaze or Yahoo, it doesn't matter what it is. You get clickbait on all sides, and that's the fiat world we live in. And that's where you're going to see the investment letter here for a long time has been structured around a new monetary system and investing in a new monetary system, because the old one clearly doesn't work, because the old one incentivizes bad behavior and incentivizes bad actors, misalignment of incentives, a malignant tumor really across the entire economy. So it forces people out the risk curve and to do dumber and dumber things, to take greater risk. So this is why this is so important to see and prepare for battle. We're in a cyber war. We're in a financial war. We're in a bio war. We're in a culture war. These things should be very obvious to especially anyone listening to this right now, especially to you, who I'm sure understands this very keenly, that we are in this war. I've been, as a middle school and high school student for the last 20 years. Since then, I have been following very closely and being very involved in politics, and then in professional sports, then starting my own businesses, being an investor, starting my own fundraising rounds and raising money, doing many different things, and being very successful. And God has blessed me greatly over the last 20 years to do a lot of things, to travel to Russia, to travel to Sweden, to travel to Germany, to travel to Slovakia and the Czech Republic, and on and on and on. And seen a lot of things. And the thing I keep thinking about is what has made me successful. What can I share really for my kids? And maybe, hey, someone else will get something out of it as well. So that's why I do the things that I do. And that's why I share what I am doing in our monthly portfolio allocation letter. You can go back and look at all of them each month. And you go to, if you're on YouTube, you can go to the blog in the description at the bottom, the Substack there. You can look at the actual version, the written version with the pie charts and everything showing the allocation. And you'll be able to see what I am actually doing. And what's, again, really the theme of everything got us to bearer assets, things that cannot be printed. They cannot be printed away into oblivion. They cannot be taken from you, especially if you're smart about it. And it's the new system, the new monetary system that we are transitioning to. Make no mistake, currency transitions, world reserves, they change generally every 50 years or so, or new monetary transitions every 20 to 50 years, generally on average. And we're at that 50-year mark plus. And so we're in those death throes right now. 2008 was really the end. So now we're going to this next phase. So what is going to get us over the hump, and being prepared? And we talk about here again all the time that the more independent and resilient are, the less we need these overlords, the less we need CBDCs and people coming at us from all angles and trying to tell us what we can or can't do with every waking second of our life. These things are only here because so many people have been clamoring for a government to do things for them. And again, that's a disease of fiat. When you break the will of the people, and remove them from humility from God, and then the next step is the money. The money is broken, very quickly gets broken. And then really the rule of law goes next, number 3. And that's where we're at. It talks about in the Communist Manifesto, the plank number 5 is the central banking system. Number 6 is taking away the means of communication. We're seeing censorship, censoring presidents. It doesn't matter what you believe. These things are happening. You have to admit and see what's going on. Remove yourself from the fray. And the humility, like we said at the top, so many people can't admit we are wrong because humility is gone, and understanding that picking up your cross and laying down your life is the fulfillment of life at the end of the day. Doing what's right is true fulfillment. Doing what we're called to do is true fulfillment. It's not consumerism or materialism or being Dan Bilzerian or Paris Hilton or Kim Kardashian or Ariana Grande or whatever. That's not true fulfillment, being empty and devoid of any value or morality inside. That is the antithesis of being a human being. But social media, the 24-hour news cycle, all these things have told us that that's the case. So I want to go through my portfolio here before I go on any more tangents And I want to read this, and you can see again the go to the Substack link at the bottom of the description and see that there. You can sign up. It's free to sign up, and you can see it and follow and have a lot of the written versions of the videos that we do in between here monthly as well. So again, something that is very important to understand that has happened and it is happening now and will continue happening going forward is this: slow and steady wins the race. Good things come to those who wait. Patience is a virtue. These are all things that you've likely you've encountered throughout your life. While not all sayings are universally true, many enduring ones are rooted in fundamental truths. Similarly, the best comedy often originates from first principles or some aspect of truth. If it were entirely fabricated, it wouldn't stand the test of time, nor would it be humorous. Our current economic environment demands a high degree of patience. Investing is a plan more than it is crazy high-flying fun. The pervasive influence of social media and the relentless 24-hour news cycle create the illusions that we must undertake extraordinary measures to secure our financial well-being. FOMO, fear of missing out, is created on a grand scale. This notion is not entirely baseless, as the fiat system, characterized by unchecked currency printing, erodes our purchasing power and drives up the cost of living. Consequently, we find ourselves compelled to engage in high-stakes trading and risk-taking with our hard-earned resources, which represent our time and energy. Must we really resort to gambling to stay afloat and avoid financial instability? I maintain that there's a more sound alternative, a much more sound alternative. We need a robust form of currency, a money that can safeguard our purchasing power over time, benefiting all 8 billion people on the planet, not just a few at the top. Fiat currencies, debt-based assets, or debt-based liabilities, these debt-based currencies, they take deflation, which is technology change and technology growth, and they distribute those winnings to the top, just to the first couple people at the top, those 1,000 families at the top that are controlling things. That is it. That is it. And there's 8 billion of us. There's 8 billion of us that will benefit from a neutral money that captures deflation and then puts it and distributes it back across the entire spectrum of people. Yes, a true money that can actually do that. This isn't some pie in the sky Marxism and things of that nature and Communist Manifesto. This actually happens. And these types of things, this type of anger, this fervor, all the protesting you see in the street, all the crazy things going on is directly because of central banking and the creation of fiat government currencies. Period. The vision is undoubtedly ambitious, but what other choice do we have? It's why I've restructured my life and my mission over the last handful of years, leveraging 2 decades of experience in politics, investing, business, money, and professional sports. This is the reality I perceive, and it's why I've planted my flag with such confidence. I often have said, it's not that I woke up one day or it was given Bitcoin in 2009 when it came out. I wasn't. I didn't get into it really, truly hardcore until 10 years after it come out. I had to go through a gauntlet, just like every Bitcoiner. I had to go through a gauntlet. I had to go through the ups and downs. I had to go through the pain and hearing about Bitcoin and not studying it like I should have, not getting into it and realizing what it was until you feel like it's too late. No matter what time someone gets into Bitcoin, they always feel like it's too late. Once you realize what Bitcoin is, you realize that the power is really infinite that it has. You realize, oh, I'm never too late. This is always going up because it's capturing deflation. Again, here's my allocation. You can go see the allocation on the Substack and actually see the last couple months, how it compares. And the Bitcoin allocation is way up. It's way up right now because of the devaluing of the currencies. So again, bought a bunch, following the blog here and following the portfolio allocation, you'll see that we bought a lot of Bitcoin over the last handful of years, and we bought even more. It's in cold storage, so you can't get it. No one can get it. It's in different locations, so it's impossible to get. Basically, it's not that I shouldn't you never say never say anything's truly impossible, but it's the hardest thing you could obtain out of anything that I own and out of anything anyone owns. So because we have Bitcoin's doubled and it's up 110, 120, or 130% since the lows of last November. And it's up 100, 110% just this calendar year. So we've done well. Where most people have floundered, where most people have struggled, again, when you put in the work and you plant your flag with confidence because of first principles, not because of some high-flying ad that you saw, or Moon Boys, or NFT, or some ridiculous thing that you hear on a hot tip. These are not hot tips. If you're looking for a get rich quick, this is not it. Looking for savings, true long-term savings, then studying Bitcoin is it. So I'm going to go through a couple asset classes here. Bitcoin, not crypto. I continue to dollar cost average saving weekly in Bitcoin, which is opposite of trying to time the market. No one can accurately time these things. If you miss the couple biggest days of the year, you are statistically behind the curve. It is better to not think about it once you have realized what Bitcoin is and just put it on autopilot. Don't overthink it. Don't overthink. Do the studying first though, right? Trust but verify. I want to save true finite money for my finite time. Period. That's what I'm looking to do. I do not want to save dollar liabilities. People think dollars are assets. They're not. They're debt instruments. They are liabilities. I do not want to save dollar liabilities or things denominated in dollars or U.S. treasuries long term because that makes you poorer over time. More on this later. We have about 44% in Bitcoin right now. And just last month, it was, let's see here, I got the last, there was 37% in October, 36% of the portfolio was Bitcoin in September. So you can see how it's going to start eating the portfolio. And the apex predator asset is going to start eating everything over the long term here. Also, take your Bitcoin and put it in cold storage. Take it, self-custody it, put it in cold storage. That is the revolution. That is the new monetary revolution that we are in. And I share some wallets, some cold storage wallets that you must think as savings. The hot wallets are connected to the internet. Those are, you think of like your wallet you'd carry on you, maybe with a couple hundred Satoshis in, or a couple thousand Satoshis, or whatever it is, a small amount that you can, buy coffee with and things like that. Use as an actual, real, uncensorable PayPal, things of that nature. Real estate section here, positive cash flowing rental real estate. Still getting the property from last month that we talked about in our last letter cleaned up. Currently, as the resident left the place a mess, as you know, dealing with a couple minor issues with incompetent local governments, which is really fun as well. The economic situation moving forward and governments becoming crazier, especially here in Michigan where the rentals are based, makes me really want to cash out and put that cash into Bitcoin, which helps build the new monetary system. And the city can deal with the landlords, again, that they deserve. The houses I have were all destroyed. They were all destroyed when I bought them in the last handful of years, and I redid them top to bottom, put tens of thousands of dollars into each one. There was almost $100,000. And you can see what happens when government treats the good business owners poorly, and they attract worse landlords or worse business owners to that jurisdiction, and the good ones leave. That tax base leaves. Now you have people that don't want to be there because you're treating them like garbage, you're pestering them, you're harassing them, and I could just leave the pile of heap. I could have just not come in and just done nothing and left it a pile of garbage sitting there. But I came in and fixed it all up and redid it. And you have governments that can't get out of their own way. And like, ooh, new person we can go after. Absolute clown world. We have about 19% in rental real estate right now. Remember, the dollar is debt. Real estate, like bonds over the last 40 years, has become more expensive and produces less yield if you don't buy properly. As you can hear, my alarm is going off. So we'll wrap here in a few minutes. I have to go get the little one. Commodities: gold, silver, oil wells, uranium, copper, wheat, corn, etc. Commodity investments remain unchanged, but I'm still contemplating selling some assets to diversify further. But I haven't pulled the trigger yet. This still will be a great asset class in the coming years as the industry is being choked from every angle with regulations, red tape, bureaucracy, laws, etc. And many other physical constraints and things that are happening, partnerships and people not wanting to deal with each other, etc. When there is low supply and much demand, prices will rise. Right now, we have about 16% in commodities and physical metals. Paper asset class: stocks, bonds, IRAs, 401ks, etc. We don't have 401ks here. We don't do that stuff. We have a tiny IRA that has very minimal in it because it was just something left over from a decade ago. But that's up double actually because I moved the funds into a Bitcoin. It was in bonds and some cash equivalents, and now a year or two ago I moved it into Bitcoin, getting some GBTC and MicroStrategy, which I'm not experts in those worlds. I know many people that are, and you can go look at the Joe Colasari's, maybe Bitcoin Tina on Twitter and stuff like that. They seem to know a lot more about it than I do. But I know Bitcoin. I know that world's going to continue rising, and ironically, I guess those assets have doubled now in the IRA. But that's something I'm not even going to expect to ever get that. If I get it in 30 years, great. Still not moving on this asset class in general, though. You guys know phase 2 really of getting into these asset classes and having, dividends being paid, or whether it's rental properties getting passive income from your rental properties, or residual income, or dividends from your stocks. That's what you want. You want passive income or residual income being paid to you, where your money's working for you long term. But again, this asset class really is overheated. It's overvalued overall. I mean, you look at people like Lynn Alden or Luke Gromen, and the people that I've been watching a bunch of these people lately. That might be something else I would do as well too, just posting a list of all the people that I watch, 100 to 200 people that you can kind of dive into and see who are the people I want to learn from. But these asset classes are overheated. Rental, real estate, paper, the paper asset class of stocks and bonds has been decimated the last 2 years, even though it's still overvalued. So think about that dichotomy. Understanding what's happening here, that's what's so important. It's been decimated, and it's called an invisible crash, especially against things like Bitcoin. Bitcoin that's way up has just decimated the 60-40 portfolio of stocks and bonds. So it's a bad trade, and it looks even worse when you compare it to Bitcoin. And there's not a lot of great prospects on the horizon here. It's one of the worst. 60-40 portfolio has been one of the worst performing trades, and these dollar-denominated liabilities will most likely not beat inflation. Really dollar-denominated assets, but the dollar itself is a debt instrument. It is a liability. These assets, stocks and bonds, will likely not beat inflation in the next decade, especially bonds. Because you think if inflation's at 8, 10, 15%, which true inflation is, but the bonds are paying 5%, or the bonds were paying 1%, and then inflation was at 5, 6, 7, 8, that's a negative return. You're still negative. So you have to be very careful. Have to be extremely careful. Bonds are citizens. This is really important. This is so important. Bonds are citizens paying the government to spend on whatever they want. So the bonds are citizens coming, giving the government cash. Go spend on whatever you want, government. Whatever. You want to kill children? Yeah, that's what we do. Our government helps people take their children out of their womb and get rid of them. So they can go do that. They can go, run money to foreign wars. They can, pay for, people's health care that are just sitting around doing nothing. Could do good things. I have yet to find really many good things that they do. So you tell me what the government does well, and I'll be here. So the government, we give them cash, or someone gives them cash, then they take that and they owe you principal, what you gave them, and the interest. Could be a 10-year, a 30-year, or whatever it is, a 2-year. They owe you that principal and some interest back. Mind you, the government doesn't produce profit because they don't provide goods or services. That's not their job. That's not the government's job. That's the private sector's job. So they take it from students. Student loan, interest on debt. They've made students a cog, just an energy-sucking life form, and they take that from the students, and they give an education that doesn't do them any good, basically, that creates brainwashed people on hamster wheels, as we can see all the students protesting around the country right now for they don't even know what. They have no idea what's going on. So, mind-blowing. And tax receipts. So it's student loans, stuff like that, but tax receipts are the big one. They have to tax you in order to get cash. All the wealth, the time and energy people spend is the people's. It's not the government's. The government thinks the money is theirs, but they're taxing you. So they're taxing your time and energy, stealing your wealth from you, your time and energy. That's taxes. And then they take all those taxes and they try to pay off the interest on the debt, which is the bond repayments. It's going to healthcare, going to the military, going to a couple different big things, right? The entitlements and interest in the debt, the public works, and the military. And the debt is your bond repayments. So they go further and further into debt, guaranteeing there have to be more debt incurred, and guaranteeing they'll have to keep taking taxes from you and your children, because the government doesn't provide anything. So you're guaranteeing you will be paid, you will be taxed in the future, and your children, and their children, and their children, and on and on and on. That everyone will be taxed in the future to help you write the second for 5%, for 3%, or for 1%, or whatever. That is bonds. Bond is root word for bondage, enslavement. It is literal enslavement. Here's the big thing. Most pensions, endowments, retirement plans like 401ks, 529s, insurance plans are all based off of bond purchases, the risk-free asset. Yes, they are risk-free because you are guaranteeing the workers of the country are going to get taxed and then have to pay off the Ponzi scheme. I mean, think about that. Think about that. So once that stops, people will start to become free people. Once that stops, once bond purchases, once the bond system collapses under its own weight, which it will at some point, no idea when, it could be 100 years from now, but bonds will eat that away. Jesse Myers does a great breakdown of this, who's a hedge fund, went to the Ivy Leagues, hedge fund guy, hedge fund cat, and he has an unbelievable breakdown on his website of so we'll look up Cresius or Jesse Myers on Twitter and his Substack, and he has an unbelievable breakdown of Bitcoin, his conservative estimates, and that's what he did, is financial analysis of what Bitcoin could potentially do in the coming years, coming decades, and taking out certain asset classes. Obviously, the easy one is bonds, taking out bonds massively. So if banks, insurance companies, if they don't get on the Bitcoin wagon quickly, they will fail. They will all go under. And those that are smart and get in will probably go forward and they'll use Bitcoin as that pristine collateral. And we can become an equity-based society instead of a debt-based society, giving people actual freedom. So anyway, we have 2% in paper currently. So I got some graphs and charts in there you might want to see on seeing when it's a good time to be in real estate and stocks, and in when it's conversely good to be in commodities. And you can see the Dow to gold ratio, so I can show you that there. So go check that out on the blog. Cash and businesses. The last one, cash is lower right now with some Bitcoin purchases and trading my worthless US trash tokens for Bitcoin. Huge wins, huge wins. And you can, anytime you can trade your worthless fiat for things of actual value. It's amazing. Bitcoin trading cards, I'll be investing in the coming months in the business side of things there. And I'll also be investing in my own education media company that we're doing here. And we'll be putting out children's books and courses on financial literacy and the frameworks for life that I have used and I'm teaching my children with. So apparently I really have to go. So cash on hand is also, and as I'm finishing here, is also a good in case our long-term view of inflation is wrong. If we experience massive deflation and the dollar increasing in strength, the DXY, you can go see it there, then we will be able to use the dry powder, the cash, to buy many more assets as well. Right now we have about 19% in cash right now in various bank accounts. And again, diversifying within different bank accounts. Remember, clearly, there has been a significant increase in my Bitcoin holdings. The trend arises from the ongoing debasement of fiat currency, which continues to drive the price of Bitcoin upward. Consequently, it is gradually taking up a larger share of my portfolio. As I've noted in previous monthly letters, we've all been instructed to save money, but the key difference lies in ensuring that our savings are allocated wisely in the right assets. Money, not currency. Money is a store of value. Dollars, peso, yen, those are currencies. Those are debt-based instruments. Money is a store of value. So you could consider gold and silver, but the truest, most finite, equal to your finite time, is Bitcoin. It's the only one I found. So if you can find me another truly finite, inelastic asset, let me know. Many individuals experience diminishing wealth daily because they save their hard-earned time and energy in a liability that is constantly devalued through excessive printing, rather than investing in an asset that possesses scarcity comparative to their finite time on this earth. We aren't out of the woods by any means. I think the next 6 to 12 months could be an absolutely painstaking ride. Though it is hard to predict timing on these cataclysmic events, we do know they will happen. Take a look at the US debt clock and the daily job cut sites to get a better picture of where we are, and make the decision for yourself where you think this is headed. I know what I think. Stay strong. I appreciate you being here. Please share this out because the algorithm cannot stand truth, cannot stand it. Trust but verify what I'm saying. Do your own homework, do your own research. Question everything with boldness, even the existence of God himself. And this is not financial advice, it is freedom advice. And I look forward to seeing you on the next one. And remember, Bitcoin, gold, silver, food, energy, ammo, firearms, community. Community is the number one thing. Some water, energy. Build those things up. In community, building your community, your local ranchers, your local farmers, your local sheriff. Your sheriff's there to protect the Constitution, there to protect you, your community, the digital community, and your community around you. It's the number one thing in a survival situation. We need that more than ever. More than ever. And please go look at the last couple of videos I did about some of the ramifications. Just in the last couple of videos we did in the last day or so on YouTube here and our Rumble and our Spotify, podcast, talking about the banks that are closing, talking about the hospitals that are closing. They're not talked about anywhere. And this has far greater ramifications than just, oh, the GDP went down or something like that. This is your standard of living going through the floor as this continues to ramp up. So you're not going to want to miss those videos as well. This is my portfolio. You can see kind of what's going on with some of the current events in the last couple of days of videos there. And I look forward to seeing you on the next one.